In this video, we will be speaking about why multi-time frame analysis is so important. And after, I will show you exactly why. We will also perform an actual analysis on a pair, so taking it, analyzing it, and seeing where we can be looking for a potential trading opportunity. So make sure you stick to the video until the end, because you will see exactly how you can be looking for an actual capitalizing opportunity in the market at the moment. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily. So I suggest you subscribe and I will see you in the video. Okay, so what I want to be doing in this video is giving you the answer to the question, why are you supposed to be looking at multiple timeframes when you are analyzing the market, and how that actually gives you an advantage over your competitors in the market. And then I will also perform a full breakdown of the situation that we currently have on USOIL to show you a live example of what you actually have to do when you are analyzing the market from a multi-time frame analysis perspective. And I will also show you where we can be looking for a potential trading opportunity on this instrument that at the moment is very interesting. Now let's start by answering the major question that we have today, which is, why do we actually look at multiple timeframes? Why does it actually give you an advantage in the market? Now, to answer this, you have to understand a key concept, okay, which is that on different time frames, the market will have different trends. For example, just to clear up the concept immediately, here on the monthly, for example, of USOIL itself, what do we have? We have a huge move to the downside, okay? The market here clearly on the monthly time frame established a bearish trend, because it created this huge move to the downside. It created a lower low. In fact, the last time that the market went to the upside was from here. So this is the low. The market broke it to the downside with this huge move to the downside, establishing a bearish trend with the creation of a lower low. Now, if we take a box, okay, exactly on this monthly move to the downside, okay, we take a box exactly on this move. And instead of looking at this specific move to the downside that on the monthly seems absolutely bearish, we look at it from a 1 hour perspective instead of the monthly time frame, where we clearly know that the market is in a bearish trend. On the monthly, we know that the market is in a bearish trend. If we go on the 1 hour, what we will see, let's go inside of the box, okay? Let's go exactly inside of the box that we have just put. Now, that was a huge downtrend on the monthly, but look what happens if we go on the 1 hour time frame. On the 1 hour, we can see that inside of the huge move to the downside that we had on the monthly, we have bullish trends also on the 1 hour time frame. So inside of the bearish monthly trend, we have bullish 1 hour trends. For example, here you have the impulse correction, creation of a higher highs and higher lows. At the same time, if here we go, for example, inside of this move to the downside, we go even lower on the 15-minute time frame. If on the 1 hour, you know that the market is bullish, on the 50 minutes inside of this area, we will have a bearish trend. So we will have a monthly bearish trend, 1 hour bullish trend, and 50 minutes bearish trend inside of here. Now, why am I showing you this concept? Because that is the point of using multi-time frame analysis. If you're able to understand how the different time frames provide the impulses and retracements by properly combining them and finding the better probabilities and better risk to rewards, you're able, for example, to ride this trades to the upside to enter during the retracement and capitalize on the impulses on the higher time frame. So you will also know, for example, that if on the monthly everything is bearish, you can be looking for a short-term continuation to the upside, capitalize on the move to the upside, and then be looking for a long-term trade to the downside, because you know that on the monthly the market is actually bearish. Just to clear up the concept on why we actually use multi-time frame analysis, because if you only look at one time frame, you will always miss the full picture of the market and what is actually going on. Okay, it's very, very important that you always look at the complete view of the market. Now, the best time frames for direction, as I said many times, are the monthly, weekly, and daily. And the best time frame for entry is the 4-hour time frame, which filters out most of the noise and gives you the best risk to reward and probability setups. Now let's give the full analysis on USOIL and see where we can be looking for a potential capitalizing opportunity. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. Now, starting here from the monthly, what kind of situation do we currently have? As we have said just now in creating this example, we have a clear impulse to the downside. Now, after an impulse, what the market is supposed to do is create a retracement, specifically because the market had provided this very nice overextended M formation when the market crashed. And if you remember, I also had a long position from an investing perspective on USOIL, which I now closed. If you remember, I managed to enter at 5. Unfortunately, in lower prices, I wasn't able to buy because actually I think all brokers stopped the trading for oil, didn't give the possibility to enter, so I just continued trying until I finally managed to enter at $5, which is definitely great. However, they also charged a very high swap on the long side, which did eat up some of the profit, but it was definitely a huge move to the upside on oil. But that is off topic. So we have a beautiful impulse, we have a beautiful retracement, and after an impulse, if you want to measure the retracement, what are you supposed to be doing? Taking your Fibonacci from the high to the low of the impulse. And what we can see is that the market retraced exactly to the 0.618, which is the golden ratio of the Fibonacci taken on the impulse. And currently the market is rejecting exactly the golden ratio, so the 0.618. And from here, we expect the market at least to try to make a move to the downside from a monthly perspective. Let's go down on the weekly and see what kind of situation we currently have from a weekly perspective. Now, on the weekly, everything is extremely simple to read. Okay, we have a market that created a nice impulse to the downside, followed by the retracement, continuation to the downside, and creation of a higher high, basically forming a W formation. In fact, if you have an impulse, correction, creation of a lower low, and then a higher high, you basically have a W formation and you expect the market to make a move back down to the neckline, aka the previous resistance here, which is now turned support at this area, basically completing the pattern. And what we can also see is that the market here, which is exactly the 0.618 that we have identified already on the monthly, is creating a deceleration. And after the deceleration, you expect the market to show you a nice move to the downside. Now, when it comes to our target from the weekly perspective, as we have just seen from the pattern, our target to the downside is exactly the neckline of the formation. So let's identify our target so we know where we want to bring the market to the downside. Now, if we go on the daily, what kind of situation we have? Now, on the daily time frame as well, everything is extremely simple. We have a market that clearly already gave us on the weekly the target to the downside. From a daily perspective, we clearly have a market that has created a rising wedge formation, which is a clear decelerating pattern that we had already identified from a weekly perspective. And now the market has broken the counter trend line to the downside, because obviously if the trend from the weekly pattern is to the downside, this break of trend line is our counter trend line break. And it has also broken the daily structure here with these two red candles that we're rejecting. The support that we have here are now broken to the downside, creating a supply area for USOIL inside of here, inside of which we can be looking for a potential trading opportunity. But first, let's go and see what we have from a COT perspective, so commitment of traders. What the biggest banks and institutions are currently doing in the market, so how are they positioned? Now, if we go and see what we have from a CAD perspective, and if you're asking yourself why CAD, because it correlates very well with oil, what we can see that we went from 38K net positions all the way down to minus 35K net positions. So from having more longs than shorts on the CAD from an institutional perspective, so 74K longs and 36K shorts, all the way down to having minus 35k net positions, so way more shorts than longs, with 58k shorts and 23k longs. So we went from 38k to minus 35k, and then in the short term we have a clear increase in the net positions from minus 35k to minus 20k, with thousands of shorts getting closed, and obviously now new longs getting added, also with the last report another 5k longs added, bringing the longs at 28k and the shorts at 48k, with a 41.2% short exposure and 23.8% long exposure. So can we expect the completion of the weekly pattern? Absolutely yes, but we first need to find proper confirmations, because you can't just short blindly. Trading is reactive, not predictive. You have to wait for the market to give you proper confirmations before you can be looking for a potential trading opportunity. And on which time frame do you look for confirmations? The 4-hour time frame. And you need a clear strategy when it comes to knowing and taking the trade according to your rules. Your rules need to be tested, both back tested and live tested. So how are we going to be approaching this kind of situation with students? If the market will make a retracement back inside of this area, what we will be doing is monitoring price action all inside of this area, waiting for the market to provide to us one of our valid entries. If the market will not provide one of our valid entries and just continue to push and push and push from a 4-hour perspective in a bullish 4-hour trend, obviously we will not be looking for the setup, because everything is bullish. The market will break the area, and I will give you guys also an update, because the structure will be broken, and as traders we have to adapt to the ever-changing market conditions. But if inside of this area the market on the 4 hours will clearly give us bearish price action, then as soon as the market will provide to us one of our valid entries, with students we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside, and on the weekly time frame see the market complete the W formation. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. We first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.